Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex and today is an absolutely beautiful day in Toronto, Canada. So I thought what better thing to do than sit inside my cold dungeon and film another video for you. Today we're analyzing Canadian Tire Corporation, which is one of my favorite retail stocks and I would recommend as a great addition to your portfolio. This stock can be found in the TSX as CTC and CTC.A. These ticker symbols represent each of Canadian Tire's two share classes. CTC is the symbol for the common share in which the shareholder is entitled to participate in company decisions, and CTC.A is the symbol for Class A non-voting shares. More often than not, if a company fails and has to sell all of their assets to pay shareholders, common shares would get priority for the payout. In CTC's case, they treat all shares as equal and pay out accordingly. CTC.A is still entitled to dividends, and as I'm not looking to provide my input on company decisions, I hold CTC.A and will be using this as a reference for the remainder of the video. Before we get into it, if you want to purchase Canadian stocks and pay $0 in fees, click the link in the description below to open your account with Wealthsimple Trade. You'll get $10 for free when you invest your first $100. Okay, let's get started. Canadian Tire Corporation is a Canadian retail company which operates in the automotive, hardware, sports, leisure, and houseware sectors. CTC is very well diverse. They have a number of banners within their company, including Canadian Tire, which sells auto parts, home decor, outdoor living products, fitness and sports equipment, tools, and much more, gas stations, and even financial services through the Canadian Tire Bank. CTC has also created CTC REIT, which holds 349 properties valued at $6.11 billion. They predominantly lease to banners within the CTC brand. Marks, which is a Canadian clothing and footwear retailer specializing in casual and industrial wear. FGR Sports that owns National Sports, Sports Experts, and SportChek, which is Canadians' largest retailer for sporting clothing and sports equipment. PartSource, specializing in commercial sales of automotive parts. And in 2018, CTC purchased Helly Hansen, which is a recognized brand for high-performance outdoor clothing. CTC then acquired Party City's Canadian business in 2019, adding Canada's #1 party supply and celebration destination to their portfolio. CTC is reaching multiple groups of consumers with a diversity in the retail industry, but it's also great to see that they have expanded outside of retail through their gas and financial services. It's also important to note that through acquisition and development of their in-house and owned brands, they have delivered sales of over $4 billion in 2019. This is important as establishing brands within your retail store means that customers have trust and become loyal to your product branding, rather than just the stores in which they make their purchases. CTC has 1,746 locations, over 500 Canadian Tire stores, over 400 sports stores, almost 400 Mark stores, almost 100 PartSource stores, and over 300 gas stations. Then there is their reward system. Triangle Rewards is one of the CTC's most significant assets. Those 1,746 locations are linked into a single customer-facing marketplace and loyalty program. Triangle Rewards allows customers to earn and redeem Canadian Tire money, known as CTM. As of the end of 2019, there are more than 9 million Canadians who are active Triangle Rewards members. This provides CTC with valuable insight into spending habits of Canadian households. CTC has been investing heavily in data analytics and digital capabilities. This allows for targeted marketing, enabling the company to deliver relevant, personalized offers that increase overall engagement. Okay, so now we're going to head over to the stock quote, and please note that I'm recording this on the 13th of August 2020, so this may differ slightly to what you're seeing now. As we can see, we closed at $129.52, up 30 cents on the day, or 0.23%. They have a market cap of $8.159 billion and a PE ratio of 15.96 over the trailing 12 months. An earnings per share of $8.11 over the trailing 12 months. And the stock is traded in a 52-week range of $67.15 and $157.36. That is a huge trading range, and that's completely due to the huge sell-off we saw at the start of the pandemic. But looking at the stock price now, we can see that it's rebounded quite significantly. CTC has a solid dividend of $4.55 Canadian, which equates to 3.55% dividend yield. Now taking a look at the recent performance of the stock, as we can see the stock was trading between the 140 and 150 range for most of 2019, And then the Ronies hit, the panic selling came, and the stock sold off by almost 50%. From mid-March, it then has regained a lot of those losses, up 53.73% from March lows. So looking at this, we're down about 14.5% from February highs. So on the 5-year chart, we can see that the stock is bouncing between the 130 and the 180 mark, and it's kind of been in a downwards trend since mid-2018. And throwing it back to 1995, we can see that the stock has been growing, falling, and it's been pretty much all uphill since the 2008 financial crisis. So now we're going to look at share price versus the fair value. An estimated fair value is based on the cash flows the company is expected to generate in the future. What we're looking at here is data I pulled from Simple Wall Street, which is a great tool for all investors. Their fair value estimate is $237.35, meaning the stock is currently 45.6% undervalued. I also always like to look at the price to book value, and the book value is really just the net assets of the company. So really this is just looking at a company's market value versus their net assets. Companies that are below 1 could be potentially viewed as undervalued, whereas those with a higher price to book ratio may be trading at a premium. Looking at CTC, we can see that they have a price to book ratio of 2. So this may be looking a little bit high. So let's compare it to other industry leaders. We have Target with a price to book ratio of 6 and Walmart with a price to book ratio of 5.5. When we make these comparisons, I think Canadian Tire's price to book ratio is fairly valued. As a predominantly dividend investor, you know they like to get down and dirty with that dividend. Taking a look at the dividend history, we can see that in 2010, Canadian Tire paid a dividend of 84 cents Canadian, which equated to 1.5% dividend yield. Now fast forward to 2020 and we get that juicy dividend of $4.55 Canadian, which equates to 3.6% dividend yield. It's also great to see that CTC's current dividend payout ratio is 55%. The dividend payout ratio is the fraction of net income a firm pays to its stockholders in dividends. At only 55%, there's a lot of room for Canadian Tire to keep growing that dividend. That is what we like to see, my people. Absolutely beautiful. Looking here at the income statement, we've seen solid growth in sales and revenue, and also solid growth in gross income. So this has meant that pre-tax income has increased, and in turn, so has net income. Going through the balance sheet, we see here that total accounts receivable has been growing over the last 5 years. This is expected for a company that is expanding. CTC's inventories has also increased. As a retail store, you kind of expect this, especially if they're growing. They obviously got more stores and therefore holding more products. These are the factors that led to total current assets growing over the last 5 years. Total assets have grown significantly, which is predominantly due to the non-current assets. We can see that PPE, which includes buildings, land, and improvement, has grown over the last 5 years, and also intangible assets such as goodwill. The jumps in intangible assets from 2018 and 2019 were due to the acquisitions of Helly, Hansen, and Party City, as discussed earlier. For the liability side, firstly, we can see that total current liabilities has grown over the last 5 years. This is predominantly due to the short-term debt they've bought on and also their accounts payable. It doesn't surprise me that accounts payable is increasing because you're working with a larger amount of units or more suppliers. The amount of money that you owe to them is just going to increase naturally. So total liabilities has been increasing due to the long-term debt. Looking at CTC's cash flow, we can see that their net operating cash flow has been around the $1 billion mark for the last 5 years, and funds from operations has been increasing steadily, which is very positive to see. In terms of their investing activities, we can see that in 2018 it did spike dramatically. However, this was due to the acquisitions we discussed previously. In terms of their financing activities, we can see that their dividends paid has been increasing, and that's really just due to the dividend growth. It's also important to note that they have been repurchasing shares, and this can drive up the earnings per share. Overall, their free cash flow has been up and down depending on what they've been up to for that year. However, they did finish the 2019 financial year with more than $652 million in free cash flow. So we're at the point of the show where I review some of the future plans that management have in place for the company. We discuss the value that this may add, and I provide my closing thoughts and opinions. Let's talk about the physical presence. CTC has stated that the vast majority of Canadians live within 15 minutes of a Canadian Tire store. Although we have seen an increase in online shopping, there is a great convenience in the ability to reach a store and make a purchase in a very short amount of time. One company, one customer. This is CTC's strategy, which has led to them investing heavily in their banners, brands, talent, loyalty program, and digital infrastructure to help drive long-term growth. These investments have generated strong financial performance and enhanced customer experience and key insights on how CTC can meet their customers' needs. The big focus here is Triangle Rewards. With over 9 million active users, this accounts for 25% of the Canadian population. This is a significant number, with every 1 in 4 people participating in the service. I think the benefits of becoming a member are so great that this will allow CTC to achieve the most valuable reward system to the consumers and the most valuable to the company that we've seen in Canada. CTC is about to launch their Operational Efficiency Program. This program aims to eliminate duplicate systems and processes along their multiple banners, drive enterprise-wide efficiencies by moving on from outdated infrastructure, and target internal and external expense reduction. By 2022, CTC is estimating that they will achieve over $200 million in annualized savings. All companies aim to optimize their efficiency, but with so many companies within the CTC network, there are many different systems and processes currently in use. Focusing on combining the best systems to improve overall productivity will allow for significant cost savings through all aspects of the business. So is CTC a buy or not? Looking at the company's past, present, and future, I see a lot of value in investing in CTC. I think their Triangle reward system sets them apart from other retailers in Canada and will help them dominate that retail market moving forward. I also appreciate their diversification into other sectors and industries. So am I buying or not? I'll be buying at current prices and definitely more at lower prices. Overall, I think CTC is a great company and I'm looking forward to growing my position in the future. So tell me, do you own CTC? Are you thinking of buying CTC? Or is it trash and you want nothing to do with it? Let me know in the comments below. I'd love to hear from you. If you made it to this point in the video, you're definitely an avid saver and investor. Did you know that if your interest rate for your savings account isn't higher than the inflation rate in your country, you're losing money every minute you keep your cash there? I created a video explaining this concept and shared the best financial tip I have ever received that'll help boost and protect your hard-earned savings. Click the video on the screen now so you too are able to implement this simple but effective strategy. So that's all for today, folks. Remember to like, comment, and subscribe to see videos similar to this one.